Hello again, Marco with Infinity Futures. I wanted to do a video to give a little bit more extra value to all of those out there that have either subscribed to the My Trade Assist program, have listed, or they are using it on a trial basis. We've been receiving a lot of questions, a lot of feedback from current subscribers, and especially with the current volatility that we've seen in the past few days, I think it's worth it to go a little step further and give a better understanding of how can you actually use this software inside your own trading approach. Certainly, the volatility that we have seen in the past week or so, there's a lot of news out there, whether it's the China war on tariffs, whether it's a European community struggling to keep together all the countries, or whether it's the upcoming elections and the interest rates, of course, heating up. So there is definitely a lot of factors, and all of these factors are kind of playing out and having a reflection in the intraday sessions. So in the past week or so, now, of course, it's October 18th. In the past week or so, we have definitely seen an increase in volatility. And there's different ways that you can assess volatility. Some of you from probably not saying anything new, but for those of you who are beginners or maybe intermediate traders, there's different ways that you can assess volatility. You can judge and analyze it and kind of forecast market extension. So we use certainly the VIX, which is the not just a trading product, but it's first and foremost an indicator of the volatility in the indices. You guys can go to cboe.com, for example, and look at the VIX chart. There's also a synthetic VIX offered on the Sierra in the study section. This is a chart, long-term chart of the VIX. As you can see, not a super tradable product, which mostly stays in a tight range. But when it does break out, excuse me, when it does break out, it does break in a nice and volatile way. So what you want to look is basically the patterns and the breakouts out of the consolidation. As you can see, in the first 2 weeks of October, it moved higher after a long extended period of levels around the 1312, 1314 area. So this is one of the indicators. So when it breaks out of the range, tight range, and it stays, I want to say, above the 15, 16, 17 level. So then it gets really interesting, especially when the trend seems to pick up. So the VIX is one of the indicators. More classic indicators, of course, are your average true range, your average daily range, your linear regression channel, or if you're also a little bit more sophisticated and you know options, you can look at the implied volatility, which is actually the option volatility. So implied volatility, for example, in the mini S&P options. You can study that and that trend, not just the level in absolute terms, but also how is that trending compared to the past weeks. So why am I saying this? Because the My Trade Assist is basically an algo based on two main approaches. One, we call it a momentum approach, which is, again, trend following breakout strategy. The second one is more like a value approach. I don't want to get it too much into it. I think this is an opportunity for another conversation, maybe a little bit higher level. But these two basic approaches define the way that you can incorporate the algo inside your strategy and define the way that you look at volatility. With a momentum-based approach, you basically enter in a move kind of in the middle of a consolidated move, when the move has already started, and it's kind of giving you re-entry. With the value approach, you look more for reversals, and it's more kind of in the first third so to speak, of the move. So when the move is about to start. So definitely volatility is an indicator that you want to know how to assess and analyze. Past week or so, the mini Nasdaq, which you can see in front of us, is given quite a few decent ranges, better ranges that we saw in August and September. And mini Nasdaq, as you guys know, at least those of you that have followed us in the past and have seen other videos, is one of the markets that we follow the most because of the tendency of having nice extensions intraday. And that's what you want to do. You never want to put your money at risk without having a proper risk reward. You want to make sure that the risk reward is always skewed in your direction, not inversely. So you're looking at the mini Nasdaq, the 5-minute chart. You can see that today was definitely a bearish move. But you can assess this if you guys have watched some of our videos, and I want to again go over it also for the purpose of people that are new to this and might not have listened to other videos. So we always take a step back and proceed in analyzing a market, and whether we want to proceed with the long side or the short side, we proceed with the analysis of the longer term chart, which could be the 4-hour chart, the 240-minute chart, or whether it could be on the hourly chart, so the 60-minute chart. We have our own indicators. We have our own recipe that puts together a series of filters and indicators, but you can do your own analysis, and I'm sure that you can, in a day like this, you could have come up with the same conclusion that the market was coming into today. Of course, even without looking at, the bars that followed, but you can see that the market was kind of topish and then broke this kind of ledge consolidation. So you then move to the 5-minute chart to look for your entry. Again, I'm doing this for academic purposes, not to really show anything in particular, but kind of guide you through the process that you should go through if you wanted to use this strategy and a momentum-based approach strategy. So you're coming into today, you're looking for shorts. Now, these first shorts right here is at 8:10 a.m. It's a hell of a signal with a close to the top. More again, kind of a reversal approach because again, it starts right at the top of the range, but it definitely has a really nice only 7-point stop, which is $140, just tiny stop, but it is kind of outside our range. So unless you really had other indicators that would have told you, you know what, market is stoppish, time to sell the breakout of this little ledge here, or other divergences, the indicators, we personally would not have taken this one because we start trading after the open on Wall Street. So the market doesn't do a hell of a lot until later on, where it gives a 10-10, which it is within our range, time range, so it's definitely inside our window. And again, another great opportunity with only a 14-point stop. Not a tiny stop, but $280, $300 stop, considering the current volatility, is definitely something that you can afford. You don't have to have, $20,000, $30,000 account to necessarily take this with one lot. So I'm not saying that it's easy. Again, the market already moved quite a bit. It almost looked like it was making a reversal, but it definitely was giving you a clean, beautiful acceleration opportunity with a decent stop. Then again, there was another opportunity even probably more difficult one, a 71.49 that also at a relatively small stop, or about 12, 13 points. Again, $250, $260. It's obvious that if you are pointing and clicking, if you need to come up with an opportunity like this, if you're not running the system fully auto, it is hard to get in a situation like this because the market is already done a tremendous move down, because it's later in the day. There's a million ways you can second guess this entry. And yet again, from 71.49 and an extension of over 50 points. So this is again to reiterate and to stress the importance of the automation, and what the right preparation together with the right process and automation can really give you the edge that you're looking for. You have to have solid risk management. Not all the trades are gonna be winners for sure, and there's always risk in place, but taking advantage of these opportunities, like a swing like this, of course you wouldn't have made the whole 72.17, 71.40 swing, but in order to take advantage of at least half of this move, you need to be in a position where you're trading hands off, and it's not easy. It's not easy for experienced discretionary traders, so it's definitely not easy for beginner traders who are trying to trade for the first time with this current volatility. In any case, I just wanted to give you a little bit of the process behind the use of the MyTrade Assist algo. If you have any questions, do not hesitate to contact directly MyTrade Assist at info@mytradeassist.com for trial or other questions that you may have. Thank you.